Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about the earnings report for Palantir Technologies, which is causing the current stock price to drop by around 12%. So this is a massive upset for Palantir that I actually called and predicted would happen in one of my previous videos. I said that their Q3 report is not going to be good, and finally that has come true. So in this video, we're going to be going over their latest news updates, what they brought in terms of their revenue and earnings per share, what their future financial guidance is, and we can use this information to try to predict the future stock price. So for more videos on Palantir Technologies, remember to go and smash that like button right now, comment your thoughts down below, subscribe if you are new, and without further ado, let's jump right into today's article. So the article we're going to be analyzing is titled Palantir Reaffirms Full Year 2022 Revenue Guidance, Reports Revenue Growth of 22% year over year for Q3 of 2022. Right now, Palantir, ticker symbol PLTR, trades for $6.91. If you're not familiar with this company is essentially a big data and analytics company that serves both commercial clients as well as government agencies, and they have price targets that range anywhere from $6 on the low end to $20 on the high end. During the earnings report, the CEO, who is Alex Karp, said, and I quote, "We beat expectations for revenue growth this quarter and expect to have a strong finish to the year, even in the face of the continued strength of the US dollar," end quote. And overall, I would say that their revenue actually was not that impressive, only coming in at 22%. Originally, management forecasted that they were supposed to bring in a CAGR, or a revenue growth rate, of around 30% until 2025, at least on average. That then got lowered down to 25%, which got lowered again to around 21%, which is why they beat slightly. Instead of 21%, they had revenue growth of 22% this particular quarter, where they brought in $478 million. The United States revenue growth grew by 31% year over year to $297, so clearly that's on track, while their commercial clients as well as government business grew their revenues by 53% year over year and 23% year over year respectively, which is rather good. Hopefully, as time progresses, we can see that their commercial clients will further increase in not only the number of clients that they're landing, but also the amount of revenue that they are bringing in. Now, unlike this quarter, I believe that Q1 of 2023, we're going to have a very strong earnings report from Palantir Technologies, and right now, Q4 of 2022 is somewhat up in the air based upon these statistics, but I will do other videos that will go in depth on those particular forecasts. Overall, the total contract revenue that this company has is close to $1.3 billion, which is very positive, and their overall customer count grew by 66% year over year, or 11% quarter over quarter. So overall, that is extremely positive. But now let's start to go over their news updates and what we think of this company and their future growth projections in terms of their stock price. Clearly, their Q3 report did not suffice investors to where the stock price is falling right now, but it really wasn't as bad as some people are saying. For instance, for their earnings per share, or EPS, they were supposed to bring in, according to estimates, 2 cents per share on the positive side, but instead they only brought in 1 cent per share, which is not terrible, but again, not very good. But the reason why investors are so frustrated right now is because in one of their past quarters a year ago, they brought in 4 cents per share for their EPS on an adjusted basis. So why is Palantir seemingly losing their ability to grow their earnings per share? This quarter represents an earnings surprise loss of negative 50%, and if we go back from last quarter, they originally projected that they were supposed to bring in earnings of 3 cents per share, which then got lowered down to the estimates of 2 cents, and then they only brought in 1 cent per share. So clearly, this was a huge upside upset for overall investors. But on the positive side, Palantir did post very good revenues where they brought in $77.88 million or $478 million worth of revenue for the quarter, and this slightly beat the forecast for this company by 0.7% overall. But I think that would actually just mean that the company brought in revenues in line with current expectations. I personally don't really count this as a revenues beat, but as long as they didn't underperform, technically their streak of consistently delivering positive revenues above expectations is still solidified. So if we compare what they brought in this year to what they brought in last year for the same time period, last year they brought in around $392.15 million for this quarter, and now they brought in $477.88 million. So clearly the company is still growing their overall revenues, and like we said before, the company topped their consensus revenue estimates for the fourth time in a row as of the last 4 quarters. So this begs the question, what is next for this overall company? Well, first, I just want to put on your radar 2 problems with the company. Clearly, their earnings per share is very bad for the overall company, and we can anticipate that the current stock price will fall further until the company becomes profitable, and current projections place that the company will become profitable on a GAAP basis in the year of 2025. So if you don't have the stomach to hold on to this stock until 2025, regardless about what the stock price is doing, this may not be the stock for you, at least not right now. But if you're a long-term investor like me, if you can identify a good price point to get into this company and you plan to hold past 2025, then this could be a good opportunity to buy the company, particularly off its current weakness, because we really don't know how far it's going to drop. Now, we do know before it's going to rebound, the overall economy does have to have some stability to it. So if the overall economy and stock market is falling, we can anticipate that the PLTR stock will fall along with it. Currently, the PLTR share price has underperformed the overall market, which is very bad because the overall market has not done very well as of this year for 2022 as of yet. And this begs the question of what's next for this overall company. Well, like we said, their earnings outlook is not very positive, and their expectations have actually changed recently to unfavorable estimates according to this particular article. Now again, that's only over the short term. Like the article also highlights, we can expect underperformance in terms of their earnings per share in the near term. However, if you're a long-term investor such as I am looking past the year of 2025 to see what this company could be worth then. But if you bought into this company too early, you probably have a very high average price or cost basis for this particular company, which would put your portfolio at a very unstable or unreliable place. This is why I always try to stress proper risk management of not overexposing yourself to any one company more than a 5% initial allocation. Because when the PLTR stock was very high, I personally invested around a 5% allocation to this particular company, and then as the stock price fell, that 5% allocation fell along with it, which then allowed me to reinvest and lower my average cost for this company back up to 5%. However, right now I'm waiting because I do believe the PLTR stock will fall even further. Now, we might see the company's stock price bounce back in the short term because after this giant sell-off that we are experiencing right now of around 12%, we can anticipate somewhat of a jump up or a small rally before the stock even falls further, which is called or known as a dead cat bounce. But overall, I would say that you're better off investing into this company over the long term. But what does this mean for the future and the price targets for this company going forward? Well, if we look at the current consensus for their earnings per share, also known as their EPS, we have a 2 cents per share EPS for their next quarter and a $507.19 million worth of revenue that they're supposed to bring in for quarter 4 of 2022, which would mean the company brought in for the entire year around $1.9 billion worth of revenue, and their earnings per share is going to be positive by 0.05 or 5 cents per share for their entire full year earnings per share EPS. And those, I think, are good metrics to hold on to. This means that once we get past the year of 2022, I personally anticipate that quarter 1 of 2023 is supposed to be very good for Palantir Technologies based upon the contracts that they have landed this year, which will show up in their future earnings report starting in quarter 4 of 2022 and then leading into quarter 1 of 2023, which I believe will cause the stock price to rally once we get there. But in the meantime, who knows how far the current stock price is going to fall before we get to Q1 of 2023. So what should we do with the stock right now in our portfolio? Well, this depends on how over-allocated you are for the company. Like I said before, if you have less than a 5% allocation to this company, right now would be a perfect time just to buy and hold until you reach a 5% allocation. But if your allocation exceeds 5%, you are taking on way more risk than is necessary, and you're begging the market to give you losses. This is one of the reasons why my portfolio is actually positive right now, due to the risk management policies that I have in place, and the most fundamental of the ones I have in place is when I invest into risky single growth stocks such as Palantir Technologies, I don't have an initial investment of over 5%. Why? Let's say we bought Palantir at $10 per share at a 5% allocation. This would mean that the company, if it grew to $20 per share, we would now have a 10% allocation to this particular company, but we only spent a 5% allocation for our portfolio. Likewise, it also saves us in the reverse scenario, to where if we only invested a 5% allocation into this company, and the stock price fell to around $5, we now have a 2.5% allocation to this particular company. And you know what this means? This means that we can now invest another 2.5% allocation into this company to not only lower our average cost basis, but also pump us back to that initial 5%. This purposefully allows you, and it gives you a metric that will prevent you from over allocating yourself to a company prematurely before it surges. Now, if this company inevitably goes back to $20 per share from our new 5% allocation, we now have an even greater allocation to this company than we did before, because remember, we have a lower cost basis now because we dropped it down to 2.5%, we lowered our average cost by buying more shares to get back to a 5% allocation, and then once it inevitably takes off, we have made good money from this particular investment, and that's how this risk management strategy is supposed to work. Now, clearly, I would advise pairing this with other risk management strategies that I personally teach, such as having a diversified portfolio with at least one company in every single sector of the stock market, on top of having stop losses on each of your investments if you're trading. Because remember, there's a big difference between a long-term investor and a short-term stock trader. I personally am an investor for the long term, but I do tend to trade very, very rarely in the short term. Overall, I am not doing that with Palantir because I believe in my risk management policy that I currently have in place for this company, which will build me wealth over the long term, even if the current stock price is falling, because once it rebounds, you're going to make a lot of money from this particular strategy. And this doesn't just go for Palantir Technologies. Like I said earlier, this goes for any singular risky growth company on the stock market. This would go for SoFi Technologies, Palantir Technologies, and a plethora of others. I know a lot of people don't understand how to practice proper risk management, which is probably why your portfolio is in the red right now while mine isn't. And if you want to take a look at my portfolio, every 2 weeks on either Thursday or Friday, I actually release a video on how I am building a portfolio up to $100,000 and how this is very achievable in a 2-year time frame. So if you want more videos on Palantir Technologies, you want videos on risk management, or if you want videos on how I'm growing my portfolio, remember to go and smash that like button right now, comment your thoughts down below, subscribe if you are new, and I will see you in the next YT video.